What's up, Sniper Gang? Welcome back to the channel. To show my appreciation for you guys subscribing and showing love to the channel, I got an exclusive video for you guys today. We're going to be talking about institutional levels and how I use my fib on those levels. Enjoy. I'll see you in the money.
We winning. Please don't hate it.
Yeah. I feel great. I feel great. I feel amazing.
For those of you that are watching this on YouTube, for one, I appreciate you guys checking this out. And the big thing that we're going to be talking about today is the institutional levels and how I use the fib on the institutional levels to get myself into higher probability and stronger trades, and how I kind of use it to really use the higher time frame to do a lot of the work for me. That way I don't have to be caught up in sitting and trying to scalp up and down on the market, when we're clearly in a higher time frame trend. So the best time to use these institutional levels is going to be when the market is actually trending. And that's, very easy to find with market structure or a trend line. But let's go ahead and jump into the levels that I'm going to use and show you guys how to use. And then we'll go a little bit onto the chart and I'll show you guys some examples of how the levels work. And then we'll talk about the fib. Cool. So the first thing that we're going to start with is the zero levels. Now, usually when people think of institutional levels or psych levels, whatever you want to call them, this is what they usually have in mind. The big zeroed out numbers. Now, when it comes to using the big levels, they are fire. And if you just sit and look at the chart with these marked up, you will see that price gravitates to these levels. Doesn't matter what pair you're trading, the levels, the price is going to look a little bit different depending on your instrument. But these institutional levels, I promise you're going to have your price treat these levels just like a magnet. And that's what we want. When it comes to these zero levels, usually I want to see these levels get stop hunted, or I want to see us be able to get a clean, smack right off of a clean big level. And then we can use that as a take profit area. So that's the bigs. Again, these are going to be literal price magnets. The reason why is because these are attractive price points and points of interest for big institutions or people, who just have big orders. So that's the zeros. We'll refer to these as the bigs. Now we'll take a look next at the half levels. The halves they're pretty fire. Again, I like to see these levels get stop hunted. And what I really like to see with these levels is, let's say we got a big here, we got a half here. Oops, that was terrible. Let's say we got another big here. So when price is leaving this big, boom, what I like to see happen with the halves is us come back in, retest, give us a trade opportunity off of the half level, and boom, smack right into the next big level. So again, a lot of the times these levels will get stop hunted. These are not, and it's not every single time, but when I show you guys a chart example, you'll see that on the half level, it's not really one of those levels where price likes to react exactly to it all the time. You'll often see a lot of break and retesting of this level, boom, before they continue on to their next target, which is, again, usually a big. So that's how we use these. They're pretty similar to the big levels, right? We still got the 1.20, 1.21, 1.22. This is literally just a halfway point in between all of those levels. So if you're, not trading euro, again, these are euro dollar examples, but if you're not trading that, then again, this is real simple. You just use the half levels in between your bigs, and that's how you'll find these. So now let's go on to, these are honestly my favorite, the quarter levels. I call these precision levels. Now, when we do this is kind of where I like to kind of refer to it as, and it's not anything official or anything, but it's an easy way to think about it, right? Let's say we got a big level. Let's say we've got a half level. And then let's say we've got another big level, right? These quarter levels not perfectly quartered out. They just are, they're in between the bigs and the halves. So when we start to use these levels here, you'll see, boom, this would be our 8 level, and this would be our 2 level. So let's say, for example, this is 1.202 or 220. This would be 1.20200. This would be 1.20800. Right? So that's the point of these quarter levels. And again, like I was saying earlier, guys, when we get these levels, this is where a lot of the precision in the market will happen. It'll come down to, the half level. Boom, sometimes you'll get a good, perfect opportunity right here, right? Check out this fib. Boom, they pull right back into a good quarter level. And then you see them either get straight to the next big, or sometimes they'll come and give you a little retest of the high and then get to the big. So again, I like to use these actual levels or these quarter levels for actual trade entries. This is, and I'm not saying that you can't enter off of a big or off of a half level, but a lot of the times when you see the big break and retests of these quarter levels and they leave great price action, they leave a lot of wicks at these quarter levels. So when you see good price action there, that's when it's going to be time to take advantage. Let me see, we got a chat. Cool. So now let's head over to the actual chart. And I'll show you guys a good example of what I'm talking about. Now, again, this is euro dollar. We are here on the 4-hour. And again, guys, I always recommend if you're going to use these institutional levels, I wouldn't go below these. Below the 1 hour, I wouldn't start veering off into this area. Because again, those lower time frames, all we want with that is to actually get down there and find our entry, right? So this is where we're going to be looking for all the price action and stuff. But up here is where we're going to actually be waiting for our institutional levels or price to approach our institutional levels. So really fast here, I want to draw your attention to the side of the screen. And you can see, right? We have the 1.19200, right? That's the first quarter level. And we have the 1.19000, 1.188, 1.185, that's the half, 1.182, that's the quarter, the 18,000 big, 17.8 quarter, 17.5 half, 17.2 quarter, 17,000 big. So you kind of see the pattern. And I actually, for my Academy members, for my people that are actually subscribed to my Academy, this is a free template that I have for you guys. It's the institutional chart. The only thing that you have to come in and do is mark up your quarter levels. So you'll have to mark your 2 or your 8 and your 2 levels. And that takes no time at all. You mark this up, you leave it there, in your current price area, and you just wait for price to get there. So now let's go ahead and check this out. So right now, when we're talking about euro, this is my current position. I'm short from right up here, right off of this perfect tap to this institutional level. Now this is a big level, right? So again, we kind of refer to these as stop on levels. So look how they treat this level when they first get here back in the past, way back over here, right? They get up there and they stop on right through it. Again, this is the 4-hour. So when you see a lot of, or when you see price and actual candles, not just wicks, but actual candles forming through these levels, those are normally the stop points that I'm referring to. So we stop on it up here. Boom, price, fell all the way down. Now check out what happens once we get back up to this level. Look how the bodies don't actually make it back up to the institutional, but we get perfect price action right off of that same level. That's what made me get short here. Now, check this out. Once we leave the big, right, we make our way down. We don't quite hit the half first, right? We make our way, break right through that first quarter level at 18.8. Now, look at this precision. Look at this perfect price action on the break and retest of the quarter level. Break right down through, boom, come right back into it, leave perfect price action. Okay? So this isn't quite where the fib comes into play yet, but this is just an example of the precision of all of these levels. The quarter levels especially, but all these levels are price magnets. So let's look what happens once they get back up into here. Boom, look, and again, remember, this move is coming from that big. So we get one push down, boom, we're looking like we're trying to come and take these old higher lows out, right? Look where these old higher lows are sitting, right at the next big from down here. So we're going from 19,000 to 18,000. So they get kind of close, they don't quite make it, and look where they pull back to from big, right? They kind of missed the next big. Look where they pull right back into the half level. So if you get a trade like, or if you get a price breakout like this, where they kind of come down to the quarter, but they don't use it very precisely, right? Like price breaks through, they kind of are sitting here for a while, they break back above, they leave some wicks, but again, this is still the whole opposite direction of the current trend. So we wouldn't be looking to use this. What we're going to want to use, and this is where the fib is going to actually come into play now. Check this out. And the way that we use the fib, we're not going to be using the fib on actual price action. We're going to be taking the fib from institutional level to institutional level, from big to big. So we start from the 19,000. We're going to take ourselves right down to the 18. Boom. Again, it's not about price, it's about the level. Now, once they get down here, they miss, they pull right back up. This would be about a 50% retracement. I don't use the 50 fib, but if you're somebody who does and you like to use the, halfway retracement as an entry, this is going to be your type of trade opportunity. Now, again, notice how we're not really going to enter just off of a railroad like this, or I personally don't. But again, this is where once you see price reapproaching, right, we've broken through. Now we're reapproaching this half level. Again, we want to see the break and retest come off of here. So as soon as we get back up in here, look how they leave this clean wick, right? Like one perfect wick right off of the 18.5 half level. This could have been a lower time frame trade, straight into profit. And look where they go, right? They run, remember, this is the big, this is the first big, this is the second big. So if you were to take this trade right off of the half, look at this trade. They break straight through the big, they bring it right to a quarter. So once you get through this big, you can take profit off of that. You can use these big levels as TP areas. Now, that was the first little opportunity that you could have taken advantage of. So now, check this out. When we get down to the next big, right, we break straight through. We stop on the level. And look how they come. They start pulling back up. They pull back up. Boom. If you missed the retracement right here off of the half level, look how they pull right perfectly back in to the quarter level. Perfect. Absolutely perfect. So again, this is where you sit and you wait. This is where patience comes into play. When you really take your time, sit on the higher time frame, you got your levels marked out, it's the easiest thing in the world. You literally just sit there and wait for price to get to your level. Boom. They bring it right back into a precise quarter level. Oops, price. This is supposed to say price. And look where they go. From quarter, right? And we know we've already worked at this big level. So I'm not too worried about, price I'm not worried about trying to take a trade off of here. I'm worried about, okay, boom, we got a little inverse head and shoulders that's pulling back. Boom, we got a good retap of that quarter level, right? We're still in downward structure. So off of that quarter level, this is another trade opportunity. Look where they go. Look how price goes straight to the big. So this is a perfect example, just this little run right here of what it looks like to get a perfect trade right off of a quarter level and to hold it till your next big approaches, right? So whenever you get in off of a quarter level, hold it to the big. Don't be afraid to, when you see it get to a half or a quarter, because again, we like to see these half retrace or these half levels either kind of send price up as a retracement, or again, we like to use them as break and retests. So when you see something like this, you don't have to be scared here. You can take partials here, let the market come back and do what it's going to do, and look at the precision. Another half level. perfect zone sitting right here, perfect kill zone. We've talked about kill zones on the channel before, so you guys should all know what that is. If you don't, check out that video. But boom, look at the kill zone. Old support turns right into old resistance. We break the precision level, we retest and reuse the precision level. That's why these are the precision levels. Look at the perfect wicks. Look at this. Look at this. I mean, this is the best trade opportunity that you can get yourself into personally, or in my personal opinion. So we go quarter to big, take profit at the big, and this is what I'm talking about when I talk about the half levels. Boom, they pull right back in. Now you got another kill zone right at this half level. Perfect example. So we'll pull out the fib, and again, we're going to go from this big right to this big. This is another 50% retracement. Boom, boom, boom. But this time, again, I personally don't use the 50 level fib, but this is clear as day. You get a triple tap right to a kill zone, right to a half level, perfect price action. You can take that trade, and guess where they go? From the start, boom, they take you to a big. Look at the perfect reaction of the big. They break and retest the big now. You get a kill zone here. Look where they go. Price uses the other big right as another magnet. Right now we got that big to big take profit. So again, if you didn't get in at the half, you could have got in off the kill zone right at the next big level, taking that right down to the next big. Do you guys see how price literally uses this as a magnet? It's the most crazy thing that you can realize, because again, it takes all the guessing out of, oh, I need to find these magic levels. Oh, I need to know exactly where the orders are being executed. You don't. You really don't. You just need patience, and you need to have these marked up and just have them sitting there. So again, kills them at the big, we go straight to the next big. Now, again, check this half level out. Boom. They get the break and retest, right? Because we broke through the half here. Boom, they come back up. They kind of stop on it. Again, they don't stop right at the level. And that's why I like to refer to the halves usually as stop point levels, the halves and bigs, because they get right here, they kind of play around there. Boom, we come right back down to the big. I mean, just look, like, this isn't even with the trend right here. And you can see how price is revisiting this area because buyers and sellers have orders here. This is a point of interest for buyers and sellers in the market. They move right back down. Look at the same type of accumulation right at this big level, right? Look at the accumulation right at this big level. Look at the accumulation right at this big level, right? Like, do we all see that? That right there is why we use these institutional levels. Orders get executed here. So again, they give us a pullback, and let me pull the fib out for you guys so we can actually measure. So from big to big, this is super fire. My goodness. Perfect price action. Literally, like I said, straight precision, right off of my favorite fib level, the 88, one of the golden levels. Super precision. Look where they go. Through the big. This trade opportunity, in my opinion, is going to travel down to the 15 big level, so the 1.15,000. That's not currently on the screen, but that's where I see us going based off of these institutionals. So again, guys, that's just kind of a quick wrap on how I like to use it, how the fib comes into play. We fib from big level to big level. We take profit at the big levels. We enter on the quarter levels, and you can enter on the half levels. I'm not saying you can't. I'm just saying that a lot of the times when you get to these half levels, you need to be patient and you need to really wait for price to set up off of the actual level. Because when you get to these quarters, it's clean. Well, like 90% of the time it's clean. Look at this one, clean. Look at this quarter, clean, right? This quarter was pretty clean. So as long as you're going with actual structure, you really don't have to worry about much. Even, I mean, literally, even if you're trading the opposite direction, look how clean they come and work off this quarter, right? Look how clean they treat this. Look how clean they treat this. Look at all these wicks sitting right here. That's all liquidity. Look at the cleanliness right here. Perfect precision. So again, guys, I hope this has helped you guys out when, we're talking about waiting for, higher probability, higher time frame setups. Really, guys, this simplifies trading a lot. Again, it brings the patience to you because the levels are here now. There's nothing else that you have to even wait for price to get there, and make sure that you're on par with market structure. Well, that's all that I've got for you guys. So again, if you guys have any questions on this and you're in the academy, just DM me, hit me in the analysis section. We'll get that taken care of. And if you guys are in the Sniper Gang here on YouTube, again, I appreciate you guys checking this out. Appreciate you guys being subscribed. And this will be in the private Discord. So you guys are free to watch this, at your own leisure. Ask me questions in there. And yeah, see you guys in the money. Peace.